Happy Friday. You're watching Businessworld Live. I'm Danie, Laurel.
And I'm just Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. Remittances sent by OFWs fell in August after 2 straight months of recovery on the back of the decline in inflows from Japan and the Middle East. Money sent by Filipino workers abroad through banks dropped 4.1% to $2.48 billion. The Bangko Sentral says this was due largely to a fall in remittances from Japan, Saudi Arabia, and the UAE. For the first 8 months of 2020, remittance inflows dropped 2.6% to nearly $19.3 billion. The top source for the 8-month period was the United States, where 40% of remittances were from. ING Bank Manila senior economist Nikki Mapa says the loss of remittance support to household consumption will likely be felt until 2021 and could weigh on recovery prospects as well. AIM economist John Paulo Rivera notes that the August remittance figure reflects the continued repatriation of OFWs amid the pandemic. Over 213,000 Filipino workers abroad have been repatriated to the Philippines as of October 11, and the DFA expects the number to reach 300,000 by December. All right, Dan, the peso erased gains immediately after the unexpected remittance drop. How is it doing as equities open?
All right, Jess. So the good news here is it has slightly recovered. So we're now trading at 48.6262, the greenback. You can see on my terminal here how the past 3 days, actually, you can see that. So on October 14th, that was actually strengthening, right ahead of that remittance print. And then right when we actually received that, it started to weaken a touch. So again, an upward trend signifies that the peso is getting weaker and weaker compared to the greenback. And now you can see that at the open, we seem to be strengthening once again. But if you take a look at, the 1-year chart, at least, you can still see that clear downward trend. So we are still at some of the strongest levels. We recall that we are actually the second best performer when it comes to emerging markets and in Asia. So not still a bad picture, and us still keeping ourselves within the 48 to a dollar level. Now, just speaking of remittances, I wanted to add of course, to your report there when it comes to remittances, because this is from Businessworld. PayMaya has now forged a partnership with MoneyGram. So what does that mean? They will enable real-time fund transfers through Visa Direct. So there's going to be a new digital capacity that actually allows consumers to send money from the US over to the Philippines, basically in a real-time, way. And this is a breakthrough because usually it takes quite some time for remittances to come through. It's also a lot of, money spent just in terms of transfers. And the US is a huge market. So they're saying that approximately 2 million people, Filipinos particularly, living and working in the US, are now going to be able to use MoneyGram to send money directly to any PayMaya holder in the Philippines. Now, another thing that they were saying is that overseas Filipino workers made a total of $11 billion dollars for US-based remittances in just 2019. That's actually 40% of total remittances in the country. So hopefully this allows Filipinos to have a better, more seamless way to send remittances back home, especially as you just reported that those figures seem to be waning amid the global growth contraction. Now let's take a step back and take a look at how equities are performing offshore, beginning with the United States. You can see a bit of a pullback here with the S&P 500 down 0.2%, the Nasdaq as well suffering some losses, down 0.5%. This is how Speaker Nancy Pelosi told Democrats that a COVID-19 relief package cannot wait or won't wait until January. So she's scheduled to have another call with their Treasury Secretary Steven Mnuchin. Recall that this has been the main issue that's been hounding the U.S. markets and even spilling over into our own equity. So President Donald Trump actually said he is now willing to go over the $1.8 trillion in stimulus, but still, because of that deadlock, doesn't seem to be giving a reprieve to U.S. stocks. Another thing that may be weighing over in the U.S. is data showing an unexpected surge in jobless claims, the highest since just the month of August, this might be a troubling sign over in that economy, which was already seeing a slowdown in the recovery. Now, another thing that investors are worried about, take a look at the U.S. stocks. That has been heavily, the European stocks rather, that has been again in the red. That's as there's growing concerns. A curfew has now been imposed over in France, for example. So again, another wave that's going on over in Europe. Now, let's take a quick peek at how Asia markets are performing. A bit on the back foot, I have to say. So you can see Japan opening flattish, but more towards the red territory there, down to 0.4% for the Topix, whereas in Hong Kong, the Hang Seng is enjoying some gains here, up by 0.15%, but it does seem to be a very mixed picture here. No clear direction as to where the Asian equities are going. Indonesia, meanwhile, and you can see the Jakarta Composite, but that's still as of yesterday, down by 1.4%. Indonesia now has the worst virus outbreak when it comes to Southeast Asia. So they've actually added 4,411 confirmed cases in that area. Recall that we actually surpassed the number of cases in Indonesia, but they started reopening even cinemas over in Indonesia, and that seems to have added to the number of cases. So in the Philippines, we actually added just 2,261 cases recently, with lower total now. Now, another thing that is, of course, affecting our markets, and I'm just going to pull out the chart for you guys, is the fact that we have seemed to be finding an equilibrium between buying and selling. So analysts are seeing the equities market, at least in the Philippines, at what they call a consolidation mode. So this is according to AAA Equities, says Chris Mangon. It seems that the last 5 trading days has just really been about an equilibrium, but there is still positive sentiment. This is according to Phil Stocks' Claire Alviar, because of the fact that investors are hopeful that the budget might be passed on time. So you actually had 5.7 billion pesos worth of trades switching hands yesterday. Net foreign selling, however, climbing to 902 million pesos. A bright spot here, though, Jess, is that the market is monitoring the daily coronavirus case count in the country. That's been slowing down in the past few days. So again, the latest print on Wednesday was actually 1,910, the lowest daily increase we've seen in the past 3 weeks. Now, another thing, however, that investors are worried about are some comments, perhaps by one of our biggest leaders, business leaders. It's Jaza, or Jaime Augusto Zobel de Ayala. He has said that Filipinos are hard hit by the pandemic. It's unlikely for the country's economy to stage a quick recovery. So he says that the general recovery probably will not happen until the end of 2021. It's realistic that, consumption is going to take quite a while to be picking up again. He even said that the earliest the vaccine could come is actually the end of 2021. So growth could actually be limited to that. But I do want to show here how Pure Gold is actually the best performer, and that's one of our biggest consumption stocks that is gaining 2.8% in this open. Now, I want to take a step back, Jess, and just focus in or zero in on the big sector to be watching out for today, and that is mining and oil. I just want to see how that has been moving today on the back of President Duterte lifting or allowing oil exploration to resume in South China Sea. And take a look at that, 8% up, 9.8% up in just the first 10 minutes of trade, with PXP Energy up by close to 50%. That's already sealing. Apex Mining as well, Philex Mining. So really the star player here. Recall that, you had this suspension happening in 2015 with the dispute between who controls the waters between China and the Philippines, with President Duterte looking at joint exploration. There was actually already a project with PXP Energy and state-owned China National Offshore Oil Corporation. They were in talks before the moratorium, but then there was a moratorium. So the government has issued notices for work contracts to be resuming there, and that's what's likely to be lifting up this sector. Now, more on markets later on in the broadcast. We've got First Metro Securities, Royce Aguilar. Meanwhile, just let's go back to those cash remittances. So that has been bucking 2 months of gains. Now you have the Labor Department saying more OFWs are up for repatriation. How many more, Jess, are coming back home?
All right, this time around, they're saying expect 100,000 more actually by year end. As it is yesterday, as of yesterday, rather, you have Labor Secretary Silvestre Bello saying that 250,000 OFWs have already been sent home, and then again, 100,000 more to be expected by year end. That, in fact, is bigger than what was pegged previously, that around 300,000 OFWs will actually be sent home here to the Philippines. This is a lot of global companies actually are starting to streamline their workforce. That resulting, of course, to massive layoffs, not just here in the Philippines but even overseas. And now you have the Labor Department looking into new opportunities here, really emphasizing on the need for livelihood, especially for our migrant workers. In fact, they are looking for a new market for employment purposes. They are coming up with a new collective livelihood program for OFWs as well. We have yet to get details on that one, but definitely that's something that we have to be keeping an eye on, especially since, of course, we are expecting the reduction in the number of OFWs to actually affect remittances as well. Let's see how things are going to fare for our remittances, especially come the holiday season, where we normally expect a peak in the inflows here coming from money overseas. But not just OFWs, Dan. Filipinos here also need some livelihood of their own, and it's a very distressing. In fact, if you try to take a look at the very stressing rather, if you try to take a look at the figures here, 3.7 million displaced workers from January to October. That, of course, is a dramatic increase. That figure coming from the Labor Department. Of the 3.7 million displaced workers, 3.4 million were affected by a flexible working arrangements here. That's from March to October this year. Now, let's try to take a closer look at the figures here by segment. You would see here around 86,000 firms had to go on closure, temporary closure at that. That affected 2.1 million employees. Now, also, you have 35,000 businesses that went on a flexible working arrangement, affecting some 1.5 million employees. And this is also very worrying that 15,000 already decided to really go on a shutdown. Now, according to Bello as well, most of the affected employees are temporarily laid off, and that they are expecting to be rehired in the coming months. Now, they are ordering at least they are working on the possibility, that you have some companies, kasi employers who are requesting for extension of the 6-month grace period by which they have to rehire their workers. So the DOLE is actually studying, or at least looking into that proposal as well. At the same time, they are welcoming moves to allow more firms to work in full capacity. Of course, we do understand that especially during the strictest quarantines, some companies were forced to reduce their workforce. Now, if you try to take a look at the displaced workers by region, understandably, a bulk of them coming from the National Capital Region. We're talking 152,000 employees being displaced here in Metro Manila. That's followed by Calabarzon as well as Central Luzon. By sector as well, you take a look at this, 21% of them are coming from the admin and support services, while 14% are coming from the manufacturing sector. By period as well, as expected, it was in June wherein there was a most displacement of workers, followed by the months of August and July. But what's interesting here, Dan, is that 11 days into October, and get this, already 66,229 employees were displaced from 2,500 establishments. So, and we're only half of October rather, still half a month to go. Let's see how things are going to fare for the rest of the month.
Okay, very worrying here, and hopefully just a temporary spike in unemployment, Jess, that we can get back towards the end of the year. But nevertheless, it's not just the employees that are having it tough. You've also got the employers hard-pressed to continue paying those salaries despite the fact that they're already suffering in terms of revenue. So no escaping the 13th month pay. That's according to the DOLE. What else are they saying?
Okay, so they're saying, distress or not, hand out those 13-month bonuses for employees. And in fact, the Labor Department is saying they are expected to at least release a new order by today. But yesterday, you have Labor Secretary Silvestre Bello already saying, they won't be postponing, they won't be deferring, and they won't give exemptions when it comes to the handing out of the 13-month bonuses here. That, of course, is mandated by Presidential Decree number 851. But help might actually be on its way. According to the Labor Department, the government they are studying proposals for the government to actually subsidize badly hit companies. That proposal is to be submitted to the Finance Secretary. At the same time, they are looking into proposals for banks to extend loans to small businesses as well in order for them to be able to pay off the 13-month pay for their workers. Just to contextualize things, of course, you have the Employers Confederation of the Philippines asking really for a 13-month exemption, especially for those who were badly hit by the crisis. And in turn, they did say, compromise na lang. Why can't the government just grant loans to firms to be able to pay that 13th month bonus? We're of course waiting for the final order today. Let's see how things are going to pan out for these badly hit companies, especially since at this stage they really need more help, but at the same time you have the government say you have to pay the 13-month bonus for your employees.
And also important to keep in mind, Jess, that the majority of workers are actually informal workers that don't even receive the 13-month pay to begin with.
Now, here are other headlines we're keeping our eyes on. The country's foreign reserves exceeded government projections for the year, reaching the $100 billion level as of end September. The end September tally is also 17% higher than the $86 billion recorded year on year. Ample foreign exchange support protects the country from market volatility and ensures that the country is capable of paying its debt in the event of an economic downturn. The end September forex reserves offset revaluation losses from the country's gold reserves and foreign currency withdrawals used to pay debt obligations. ING Bank senior economist Nikki Mapa says the record gross international reserves reflects the continued balance of payment surplus. But he added that the rise in foreign reserves show the country has ample buffers against speculative attacks on the local currency and a shortage in dollar liquidity. Now, the Philippines Chamber of Commerce is appealing for rent relief for MSMEs that are tenants of malls and other small buildings. The Business Chamber is proposing lessors to support smaller tenants by allowing them to pay a low rate in exchange for a percentage of sales until their businesses have recovered. BCCI explains that due to limitations brought by the pandemic, MSMEs are finding it difficult to recoup their operational costs to pay their rents on top of utilities and workers' salaries. Supporting MSMEs can also pave the way for economic recovery once they boost their digitization efforts. Multi-tech company Cisco Systems said digitizing small and medium businesses could boost the country's GDP by up to 1.36 trillion pesos in 4 years. This, Cisco explains, is because digitally mature businesses tend to enjoy higher revenue and productivity growth. For now, though, Cisco's survey shows that 73% of the country's small and medium businesses are still digital indifferent, which is only the first stage to digital maturity.
Healthcare spending rose nearly 11% in 2019 to 792 billion pesos, with most of the burden still on the households. That's according to data from the Philippine Statistics Authority. Now, out of the pocket spending among households account for nearly half, or around 379 billion pesos, of the total health expenditures last year. However, this was slightly lower than its share in 2018. Government schemes and contributory health financing schemes, on the other hand, account for 42%. That's higher than the figure in 2018. In terms of per capita expenditure, each Filipino spends around 6,600 pesos for health-related expenses in 2019. That's up 7% from the previous year. Union Bank Chief Economist Carlos Asuncion attributed this increase in healthcare spending to households becoming more affluent at the time of robust economic growth. Asuncion expects healthcare spending to continue this year amid the pandemic. Here we are approaching the end of another trading week with the market still in consolidation mode. They're here to help us take stock of what has happened so far. It's now the middle of October. We have with us Royce Aguilar from First Metro Securities. Good morning, Royce. Welcome back.
Hello. Good morning. Good morning, Danie. Good morning, everyone.
Royce, I'm just kicking off with the exciting news of the day, which is, of course, the miners. I mean, take a look at my terminal here, PXP Energy. I think that's already in ceiling na. So, stop na yan at 50%, no? Apex Mining and Felix as well. Was there any indication that this would be happening whatsoever? And is there a risk that a moratorium could be back on, on the table anytime soon, yet again? Or is this something that fundamentally changes the game?
Well, I think in terms of the signal, of course, hindsight is 2020. When I was trying to read the news last night, I think there were some news around June that DOE was really pushing for the lifting of the oil exploration moratorium. So of course, there's no indication at least for the past few weeks, but of course, for the past few months, there has been some news that they're really pushing for it. I think for us, it comes as a surprise in terms of the timing, of course. But nevertheless, um, this changes the game for TXT because this is actually one step ahead of actually in terms of the in terms of the claiming of the West Philippine Sea. Um, Keep in mind that when TXP, in terms of the news, when DOE was just planning to lift the oil, or at least planning to push for the lifting of the moratorium, TXP was already rallying just from that news around double digit. And now, I think for me, this is kind of warranted in terms of the
Mm-hmm.
rally, and there may still be some upside in the next session, given that PXP has really been sold down because of the pessimism regarding the West Philippine Sea situation. So this one is a game changer for them. Hopefully, it becomes a binding agreement. Right?
Bryce, just to note, no, your audio is a little bit weak, so maybe you can speak up a little bit. But just to jump off on your point earlier on, why the timing? Why suddenly now? Does this have anything to do whatsoever with the economic issues or the contraction that we are seeing? Is this going to dramatically alter our economic growth prospects if there is exploration that can be happening?
Well, in terms of timing, I think at the end of the day, again, hindsight 2020. When you think that the government really needs funds in terms, especially for the mining sector, there has been news as prior to this that the government plans to revive the mining sector for more government
Mm-hmm.
revenues, and I think that's a good strategy. And this decision may be related to that one. So at
Okay.
the end of the day, it's a win-win for everyone. It's a win-win for everyone regarding allowing PXP to operate or to resume its exploration activities. So
What about the other mining players? So apart from oil, you've also got the nickel miners having rallied recently because of nickel prices. What was that nickel price rally all about? I mean, does that signal that the economy is picking up, needing more of this metal? What's going on here? Is that a safe haven asset like gold, and how are we related?
actually, nickel is more of related to economic activity. But keep in mind that our nickel businesses here export their products to China, and China, as we know, the first one to have COVID and the first one to recover. And right now, they're seeing
Okay.
significant demand for nickel for their electric vehicles and the like. So I think that's the main catalyst for nickel. So
Are you excited for our own nickel miners to actually be taking advantage of that? Have they been significantly oversold because of the pandemic?
oh yeah, well yes. I think I think for the first half of the year, it's kind of warranted mainly because last April, Nickel and FNI temporarily suspended their operations. So of course, that's going to affect their numbers. But with first half numbers already disclosed, now we look forward. And nickel prices have gone up in the second half of the year so far, and demand has been steady. So that has been the catalyst as mentioned earlier. So yeah, we're pretty excited in the prospects of nickel. Hopefully, it sustains at the end of the day. The electric vehicles demand is there. It's just a matter that it just got stalled initially, mainly because of the pandemic.
Okay, so a sector, mining and oil here, that hasn't really gotten a lot of attention is now finally in the limelight. Let's take a step back, Royce, and just talk about these figures that we've recently gotten. The remittances, for example, surprising on the downside. But then again, it also showed, signs of improvement and and really surpassed expectations the past 2 months. What is this saying? Was this actually expected naman by the markets that this slowdown was imminent? And has it already been priced in when you're talking about consumption in the last 2.5 months of the year?
Okay. I think in terms of remittances, of course, investors, economists are still watching out for the month-on-month data. But I think what's noteworthy is the forecast of the BSP in terms of its remittances, that it actually hiked its forecast mainly because of the performance for the past 2 months prior to this one. Um, Nevertheless, I think we expect some volatility in the data mainly because probably in terms of the recipients of the data, in terms of the behavior in remittances, which has changed in terms of the repatriates still going home. But nevertheless, bulk of the remittances still come from countries where Filipinos are health workers, and health workers are kind of a need right
Okay.
now. So we recognize that some of other professional jobs have been laid off, but nevertheless, I think moving forward, the jobs of most of our countrymen are still in need, right? So the medical workers, the domestic workers are still in need. So you see that that most of them will still stay in their country, hopefully at a safe environment moving forward.
Royce, let's talk about the cases having gone down. Hopefully, this is a trend that could continue, but we've seen the lowest increase in cases in the past 3 weeks, even as the economy is starting to pick up again, and even as the government has, eased restrictions even on public transport here. Is this an encouraging sign, and is this time to start slowly positioning or re-entering the markets, especially since we're in consolidation mode? Are you expecting a breakout?
Okay, so that's actually a good point. What we continue to tell our clients, of course, first regarding the cases, we welcome the recent development, is the lower cases for the past few weeks. I've noticed that for the past few weeks, we only reached 3,000 daily cases around a couple of times. So, of course, I've been also receiving news that we reached below 2,000 cases in a day, mainly because some labs have not reported. Nevertheless, we have been reporting below 3,000 cases in peak reporting of the lab. So that's a welcome development. So what we tell our clients is to continue trying to position on resilient names. Now we continue to tell them not to position all um, index names. We tell them to accumulate, select resilient
Hmm.
big cap names, which at the end of the day, they are the leaders. They are the ones who will pick up or recover first post pandemic, or at least in the new normal. So there.
Okay, I think Jess has a question here. Since we were on the topic of big cap performers, we did have that rally yesterday, Jess, no?
Yes, I think, of course, you have after that latest development here regarding Heineken. This, of course, coming up, the deal that they're going to, if I'm not mistaken, distribute Heineken here in the country. How's this going to bode well, or at least how is this going to affect at least the performance of LTG moving forward?
Sorry, can you repeat the question?
Are you banking on LTG, especially since it rallied for a couple of days already on the back of that Heineken acquisition? Was that just excitement and sentiment, or is this really going to contribute to the bottom line?
I understand. Okay. So now regarding LPG, I think what the problem prior to the Cignal was Heineken was sort of 18 Heineken Philippines was already brewing and distributing in the Philippines. But the problem is they didn't open inside offices trying to promote the product. So what they did,
Mm-hmm.
actually a good strategy is to establish a marketing um, facility here, and which encourages Asia Brewing to further brew and distribute the Heineken product. So that we think that it's actually a good strategy for them. And I guess we showed that one of the latter. And right now they seems like they still have some upside. Maybe because number one, they have been outperforming relative to other number
Okay.
some upside. But regarding the PNP, regarding the asset sales, at the end of the day, the funds they will raise from that can be used to further strengthen its balance sheet. And another thing is the tobacco business has been offered for recently the increases prices of tobacco, but nevertheless, while their sales, while their total cigarette sticks may be lower, at the end of the day, their profit continues to get bigger. So we expect that to continue. So LPG may still have some upside and at least have some content catalyst post the day.
Okay, so thank you so much, LTG. Still some upside there, especially as they're learning, starting to use the proceeds from asset sales also to help cushion their other businesses. Thank you so much, Royce Aguilar of First Metro Securities. And that's a first look into the business day. Today's October 16. I'm Danie Laurel.
Catch us again Monday next week at 9:30 a.m. I'm Delos Santos via One News.